Hi everybody, it's Emini Trading. Today is a gap trading tip for you, and this is the floor session of the ES futures. So if you're not using TradeStation, which it's at es.d, then look for the symbol or the ticker that gives you just the floor session and filters out the Globex so that you can see the gap on the day. So what we've got on this chart is we've got pivot points, and we have got the open, the half gap fill, and we've got the gap fill. And I've put one other thing on today's chart just so I can show you, and that is the green line which you see here, the green solid line. That is the point of control from the market profile. Today it was 1025.50, and we are going to use that, those simple things, on a 5-minute chart, or you can put it on a 1-minute chart if you want. It doesn't really matter, whatever time frame suits yourself. But we put those things on there, and we're going to assess then from that what type of straddle between the opening and the previous day close is in the middle of that gap, and whether that's significant enough to stop the gap from filling. So in today's case, we had a 4.5 point gap, and 4.5 points is not a big gap to fill. You know, most people would say, yeah, do it in a heartbeat, but today it was a lot of heat before we even came close to getting a full gap fill. But most people that were looking for a full gap fill either would have been stopped out, or they wouldn't have got a fill because it only just touched it to the tick, 1024.75. Didn't trade 1024.50, so those that were looking for full gap fill at the full gap fill price probably wouldn't have got it. Okay, but more importantly, what was the critical thing that saved me the dollars on today's gap was looking at the confluence zone before the market opened. Okay, so, and using that as a critical, and I stress that, critical point of contention, to say that that straddle was very large, and in my case, it was one of my rules that stopped me from taking today's trade and saved me from taking possibly a full hit on a position and saved me some cash. Okay, so today on that 4.5 point gap, okay, we saw a 8.75 point rally from the open to when the economic data was released, where it topped out at 1038. Okay, before sort of selling off and then bouncing off the pivot and the point of confluence and that wall, and still sort of possibly sort of retesting that pivot point. It held for most of the day until 2:45, where we got this touch to the previous close, and then another bounce, and then it sort of came back to hover again around that confluence zone that stopped me from taking this trade. So what I'm going to do is I'm going to put a box on here and show you it was this zone here that stopped me from taking this trade. Okay, so in this zone you have a number of points that make up this point of confluence. Okay, we had the daily pivot, which was 1027. Okay, we had the woody pivot, and the woody pivot was 1026.50. Okay, we had the floor pivot, which is a daily pivot there. We had the Globex pivot. Okay, so we had Globex pivot. We also had the mark pivot point. Okay, put a little M in there. That was sitting at 1025.50. We had the point of control off the market profile. It too was sitting at 1025.50. And we had a few other points of confluence. I won't go through them all, but you know, 1, 2, 3, 4, 5. You know, that's that's an alarm bell for my rules, and it was enough to stop me from taking the trade and save me some bucks on the day. So each day it's a good practice to look at the confluence zone that is possibly straddling between the open and the previous day close. That's putting some barrier in that gap fill process, and assessing whether it's big enough to stop the gap from filling. And today it didn't, but it's saved me some cash. And I guess if everybody sort of looks at the confluence zone that may be stopping the gap from filling, then it could save you some cash too. So I hope that helps, and look forward to the next update. Stick to your stops.